All right. So today I was thinking about going through all the things we have done, solve any questions you have, and work with psychology today mainly. First, what we'll do is we'll start with the problems you guys are facing so that everyone is on the same track and we are very close to finishing this boot camp. So it's much better that we do this now. And once the advanced stuff starts, like there are only few sessions left for the advanced stuff. After that, you will be able to do everything on your own. So I want this session to be more about you guys, your questions. First, we'll begin with your questions. Any problems you're facing, any challenges you're facing, I want you guys to ask now. Maybe drop me a private message if you want. I won't take your name then. If it's okay to publicly accept, understand, and mainly just show yourself that you're facing problems here. It's okay to be open about it. So share it now and we'll work on that. All the problems, drop it in your chat so that we can fix it today. Today is the day we are taking this time out specifically to solve the problems you're facing. So do you mean to ask how did I drew this trend line? Do you want to understand the logic behind this trend line? So it's very simple. When you see positions on the daily time frame, when you go up on the higher time frame, there's a simple touch coming down. And after these two touches, this is the starting point. We can clearly see that. Then we have one touch. Of course, you can start drawing your trend line from right here. But this line gives you a better confirmation. And you can use this tool right here. There's all these tools available. Trendline, Ray, so many things. But I have a set of tools that I use at max. These are the rare ones which I use, but these stuff, not the brush, the call out or something like this is commonly used by me. So I use this trend line, I bookmarked this, so that's why this bookmark bar, favorites bar exists. And what I do is just mark from the second position. As soon as I see the second touch and I can clearly see now there's a trend going on, that's when I start drawing these lines. Of course, you might say I am a little late in the trend, but that also gives me a confirmation that the trend is going to run longer. If a trend doesn't run long, that means you're not able to make much profit out of it. On the third touch, you see it's quicker. On the fourth touch, we are already here. The price is going up, but as I had predicted, uh, I wanted the 4-hour EMA to retest. It's retesting, it's right now moving down, similar to what we have been seeing in the past. And then I want to see the break of this structure again to enter. Once that happens, I'll enter. So trend lines is basic, very simple. You just use this line, connect connect the wicks or bodies, whatever you can at this point. For example, let's say I'm here. I can see this point right here, and then there's a trend kind of a stuff going on around these lines. There's second touch, and then there's the third touch, right? So what I did is I just covered the touches. That's it. If the price is not touching, I'll try to at this point I'll try to move this a little bit up to make it touch. And then let's say what I'm doing here right here, you can see now we have more touches on the same line exact. You can see it's almost to the pip where price is retracing from these lines, but this trend was over. Price moved into another trend at this point after this. Now, uh, so you get confused how to take long or short positions. So, do you get confused whether to take long or short positions? Or, I mean, are you confused in deciding which one to take? Which? direction you want to trade in. All right. So as I said in the previous session, when you're trading with multiple time frame analysis, right? On the multiple time frame analysis, the thing is you have to first see what time frames are in sync. So if weekly time frame is telling you it's bullish and daily time frame is telling you it's bullish, and then the 4 hour time frame either it's bullish or bearish, what you do is based on weekly and daily time frame, once these two time frames are in sync, you try to you want to enter only long positions at this point. Doesn't matter what the 4 hour is saying. You want the price to come to a support zone. Okay. For example, let's say this price was moving up on the daily time frame, and you clearly see this is a bullish structure, right? And you're looking at the market at this point. So what you do is you try to create a weekly support and resistance. Now I can clearly see there are a lot of touches around this place, right? Even though there's one right here as well. So there's this previous high as well that can also be drawn, of course. So these two areas are where I might trade from. And luckily, you can see the price came down to this level. Not luckily, it's what you predicted. On the weekly support, the price moved down. And then from right here, you go down to your 4 hour time frame and wait for it to become bullish. Now, at this point, it's very clear it's that was this price at this point was bearish. You can see this is the higher low, this is the higher high, and then all of this is structure in between, and then this becomes the lower low, this becomes the lower high, right? Now this continues, so this becomes the lower low, this is the lower high. Now again, this is the lower low, this is the lower high. Price became bullish at the end. Now what you do is you wait for another leg because it just turned bullish. It might again turn bearish, right? So what you do is you wait for the price to give you another higher low. So when you see the price is again doing this, it's doing this, you have to wait. And then it starts moving up again. At this point, now after this structural change, now you can look for entry. So now at this point, you can also see the stop loss would be very huge. But if you don't get that kind of a trade, you can of course go down to different. I already have an entry right here, but that is based on lower time frames. I don't know when I traded this. This was in November, and it was more of based on EMA based trading. You can see this. Let's see 2 hour time frame. All right, all right, yeah, 2 hour break around this point, and I guess I took a buy limit order, waiting for the price to hit this level. So there are different strategies of trading this stuff. You can see 2 hour has been respecting the EMA a lot, and I only entered a bullish trade trying to cover a smaller stop loss. This was more of a day trade. I don't recommend this because this is what comes from experience. Not everyone can do this. The entry is clearly on the exact 2 hour EMA. All right. Now this was a decision based on higher time frame, right? Now we have support and resistance. Now when you see support and resistance, there are different type of trades you can take. Both these strategies are very different, very much different. Now I can clearly see when the price comes around this level, there's some kind of rejection. There's some kind of rejection. At this point, there's some kind of rejection. So this wick, just because of this wick, this price action, I can see, I can clearly understand that price will easily reject from this area, right? Reject from this area. So if I want to take a trade from this point, I would look for a trade which is either crossing this and retesting these levels, and then I look for a buy position. Or I can look for a trade that is starting to reverse from this position. So for a short trade, I can take both kind of trades, right? But the only thing is I like to trade with the trend. If daily time frame mainly is bullish, I wouldn't go against it. It's rare that I go against it unless I see a very good risk to reward. And of course, my entries are based on confirmation, more confluences, where 4 hour time frame changes its direction, all of this stuff. So I just predict what price can do, what are the odds of price doing that, and based on that I take a decision. I would take a long trade, and for this long trade to happen I want the price to do exactly this, maybe change in structure or something like that, and then I'll take my entry. If all of that doesn't happen, that confluences don't add up, I leave it as it is. I don't trade that. I hope this is clear now. When entering the trade, all the time frames like 4 hour, daily, and weekly should align. Okay, that this is based on multiple time frame trend. Support and resistance is different. 4 hour is enough for support and resistance. Daily time frame is not necessary. I have taken trade based on 4 hour. You will definitely see a pair which has high rejections from a support or resistance area. You will definitely see price, when the price comes to that point, you will definitely see some kind of rejection. So what I do is I simply count the odds. Okay. So you can maybe count like one, almost two, three, right? Price rejected from here. Now this is daily time frame. I'm gonna take entry on a smaller time frame. So that means all of this price action is going to at the end give me 1:2 or 1:3. Now right here, rejection, right? One, two, three, four, five, six. So when the price next time comes in around this levels, I'm gonna look for a short trade on a lower time frame. That's it. Now, with that, you also need to see these kind of stuff where EMA is showing up, right? These are the additional parameters. You can see daily EMA has been respected a lot. Now, when your daily EMA is doing this, would you want to take a trade from here which is going to look short? So, when you're analyzing a pair, whether you want to take a long trade or a short trade, it's simply based on what price action you're seeing in the chart. You can't just be blind to it at all. A lot of times on the weekly time frame, let's say an EMA is getting respected, price will become bearish to continue up because it has a weekly EMA down there, and a lot of buyers are sitting on that support zone compared to any other support zone. So price will break that support zone and come to the EMA, retest it, and then start moving up. So you have to see what price action is showing you at that point. Without that, you will end up making mistakes. So try to find relations in the charts. Start spending time with the chart. You can't do anything else. Your whole day should be like you're there with the chart all the time. When you do that, you get to understand what price action is doing. Now, for example, we analyze this pair on USD CAD, right? Day before yesterday, I told you there can be two types of price action. Now, the price might definitely can move up and just go down, but I expected price to go up, and I'm still expecting the price to come down to break this structure. This is what you look for. If these confluences don't add up, I'm not gonna trade. That's it. Price might just go on, retest this level, and go up. But this is not what I predicted. So I'm not gonna take that trade at all. Because there will be a lot of trades you will see happening right in front of your eyes, and you don't have to enter that, because that is when you start making mistakes. You weren't at all prepared for that. If you would have prepared, then it's a different story. Now a lot of people, what they do is they try to predict both the directions. What they do is they do this, and then there's going to be another retest, and then price will do this. Either that will happen or this will happen. Now the problem with that is you're too much confused at this point. You see price going up right here. You see an entry, right? You see an entry right here. And what happens is price starts moving down. So you're just getting confused again and again what the price is going to do. Rather, have a very strict rule that you're going to take a trade if price does this, and I'm going to take a short trade. Don't look for multiple directions. It's just confusing. It's very much confusing. Okay. Any more questions? Everyone, please answer if you have any questions. All right. So, Sadia, you have been facing problem with lower high, higher low. Let's begin with lower high and higher lows. Again, let's clearly understand this. If you have any questions, if you're facing problems, you're still having any difficulties, ask me today in this session. All right, let's begin. So let's start with 4-hour time frame itself. Let's see. Okay, the price is doing this. Price is doing this from year to year. So this is your lower high at this point. This is your lower low. Makes sense? Next, this is just a structure. You can see there's a small inside body and then there's second inside body. My rule is if there are two inside bodies, then it's a structure and that structure should be accounted. But it's just a structure. It doesn't mean this is a higher low or anything until there's a break. Now this structure goes down, now goes up. Now we can see there's a break to the bullish side because this line was crossed, right? This is your lower high. This was your lower high. Now this was broken. So this becomes your higher high and this becomes your higher low. Okay. Now, again, what happens is price comes down and moves up. Again, this is your higher high. This was your higher high. Now this is your higher low. Now this one is your new higher high at this point. Next, what happens is at this point is your higher low, right? Price breaks this structure from year to year. There's no structure in between. You can see there's no two inside bodies or anything. It's just the price is just smoothly going down to this level. Now, this was previously your higher high. This becomes your lower high at this point. Higher high at the end becomes your lower high. And this becomes your lower low. Now, this candle is huge. I can clearly see an elbow because it's not an inside body. What happens now? This price becomes your lower high and it's lower high because there's a breakdown there. Until you don't see a break, there's no lower high. Okay. So now at this point, I can clearly see the price went down to this area. Now this is your lower low. This is your lower low. This is your lower high. So now I can clearly see there's one inside body, the second body just next to it, third body not clearly breaking this low. This becomes your lower high, and I can see there's a breakdown. This is your lower low. Again, lower high. Okay, let's, yeah. Now this becomes your lower low. So far, so good. Okay. So now at this point, you can clearly see again, this line is your lower high. This line is your lower high, and price from here has moved up, broke this level. So this becomes your higher high, this becomes your higher low. Now all of these structures exist. This is definitely, you can see there's one inside body, the second body just next to it. So this is your second structure. Sorry, first structure after this. Next, price moved up again. So there's this structure. This is just structure so far because no one has broken this level. Now there's this structure again, and what happens next? Price breaks this level right here from here. All right. So this becomes your higher low. This is your higher high. Okay. And why is this your higher low? The price, if you just see it coming down on this line, it's coming down and then it's taking a turn. It's taking a turn from right here. And this turn is what we call the higher low, the first turn next to it. Now, any candle in between, this small candle or maybe a green candle is just appearing in between. It doesn't mean anything. It doesn't mean anything unless it creates an elbow. I'll show more examples. Something challenging. Maybe I'll just go down to 1 hour time frame. That will be much more choppiness. All right, we'll start from here. Let's see. Let's start from here. So you can see there's a candle right here. There's a small candle next to it. Small candle, and then the price is starting from here. But this is just one inside body, not two inside body. So this one becomes your higher low, and then there's this candle. This candle is again a inside body, one inside body, nothing more. Then this becomes your higher high. Now the price comes down to this level. There's one inside body, there's second inside body. There's second body just next to it, and it's not breaking the level. So you have a higher low. Now this one broke the level just by a few pips, but it broke the level. So this is your higher high. Now this is your higher low. This is your higher high. The price broke the structure. So this becomes your lower low and this becomes your lower high again. Now we have, it doesn't matter whichever. So the question is LL is opening of green candle or closing of red candle. It doesn't matter whichever price is higher at that point, because a lot of times you see there is some gap in the pricing. You might see a green candle close here, but a red candle starting from here. So this becomes your high high, not the green candle. Depending which one is the highest one on the lower low side, whichever is the lowest side, whichever is the lowest candle, that becomes your lower low. If you see there's a red candle right here, there can be a gap and green candle opens from right here. So if green candle opens from right here, then that is your lower low. Now, there's one inside body, and again, there's second body which is just inside this green candle, right? Mainly the red candle. The red candle, there's one green candle inside, there's second green candle inside. Now the third red candle. So this becomes your another lower high, and this becomes your lower low. Now there's a huge elbow. You don't need to think of inside body and anything like that. Again, it's a clear lower high, and there's a lower low. Now there is two inside bodies. You can clearly see that the body is completely inside this big candle. So this becomes your another structure, and price broke that level by a small pips again, by a small difference, and this becomes your lower low. Now, as this was your lower high and this is your lower low, the price again moves up. This is your higher high, and this previously was lower low. This becomes your higher low. It's very clear. I know the terms get confusing a lot of times, but this is the rule of how you do it. Watch this session after I'm done uploading and understand this clearly, because if you don't understand, I have said this, you won't be able to do what I'm doing at all. You'll make more mistakes. You will have a lower win rate, which eventually will blow your account. Now, at this point, you can see this is the level, and price, I think, didn't break that level at all. Yeah. So this is just an empty structure. This is a structure, but this one finally broke. So this becomes your lower high. This just remains as a structure. This is nothing else. This is your lower high. This is your lower low. price became bullish and bearish. And that's why I say, always say that take your entries on 1 hour time frame, but use 4 hour for trend confirmation, because 1 hour quickly turns bullish, bearish again and again. It's very much noisy compared to the 4 hour time frame. 4 hour is much stable. All right. Any more questions? I want all of you to send me this higher low, higher high markings tomorrow. Tomorrow there's no session, so I want all of you, every single one of you, to send me the markings of lower high, lower low, everything. Any questions? All right. So now let's talk about a little about trading accounts, right? This is important because a lot of people, I know there's one person who is on Telegram, who's always in contact with me, is making a mistake. And I don't want you guys to do the same. And I'll tell you why. First, I need some information from you guys before I continue. Of course, this information won't come out because your chats are never in the YouTube. So, how many of you are trading on the prop firms? Say no if you aren't. Say yes if you are. All right. What's your account size on prop firm? All right. For the people who are on the broker, what's your account size on the broker? All right. Now, how many of you are profitable? Say yes if you're profitable, say no if you're not. So, in short, you guys are not making money and losing money from the market. Am I right? All right. So, tell me, why do you have 100K Profirm account? Why do you have 100K Profirm account? I'll come to one by one, I'll come to everyone. But let's start with you. Why do you have 100K Profirm account? What do you want from that 100K Profirm account? So maybe you're greedy, you're just looking for, you'll make a lot of money because the account size is so big. So of course, each trade you risk around $1,000. And by the signals I'm sending to you guys, or maybe you believe in yourself too much, and that's why you have an account where you risk 1K and you get around 3K, 5K, or something like that. But imagine none of that happens. None of that happens because that's a very big possibility. Most of the traders fail rather than becoming successful. Most of the traders fail, and so far you have only lost money. So far you have only lost money. So why exactly do you have a 100K account where you're spending around $550 or $600 to acquire that account, only to lose money? Only just to lose money, that's it. Maybe you make money, there's two-step challenges, but have you proven yourself on a 5K account or a 10K account? That's a very small size, comes like very cheap, $39 or something like that. It's very much cheap. You haven't proven yourself and you're on a 100K account. That means, let's say tomorrow I disappear and I'm not sending signals at all. Right now, a lot of you and in the Telegram group, they message me every now and then that they are benefiting from the trades I take. And now I disappear and I'm not sending you those signals. Then you might just completely blow up your account, or lose all the money you have already spent. $550 is something, a huge amount. It's not a small amount. You lose that money for no reason at all. So you have already taken that 100K account. I don't want you to continue doing that. If you blow that account, make sure you go down to 5K account or 10K account and trade from that. The reason behind this is very simple. People, first of all, everyone is very optimistic. Even I have struggled throughout my life. I didn't do college education at all. I did everything on my own. I became a very good iOS engineer, and I was very well paid. Very well paid. You can describe it as top developers, top software engineers. I was one of them. I was getting very well paid, and then I started trading. So imagine that confidence. I brought that to the market. I brought that to the market. And when you have that ego, that confidence so much on you, you will see yourself shattered, you know, because After that 100K account, you won't buy that 10K account. You want to make that $500 back. You will buy another 100K account. You'll buy another 100K account, and that series will continue until you have no money left. And this is the story of majority of the traders you see out there in the world. They have all done this. They have all blown the accounts, right? They have all blown the accounts. And if you can just check out, you can there's a lot of people in the community, on the Telegram groups, the Discord groups, free Discord groups. There are hundreds of thousands of people who have done this. And I had that confidence that I am going to be that 1% who's going to be very successful. And that confidence never went out. I still have that. I'm already profitable now, but that confidence never went out. The only thing was I was very much humbled with the market. I never knew that it's gonna take so much from me. It took a lot from me. I had to struggle a lot, and I don't want to see that days again. I don't want to go through that again, and I don't want the people around me who talk to me to face that problem again. It's going to be a very difficult journey. It's not going to be easy at all. You can't think about making money right now. Even though you complete this boot camp or whatever you've done, you think you have an edge, but your psychology is going to be an edge. Not what I'm teaching. All of this can be learned very easily. I had done this in my, I just watched FXLXG's free sessions for like a day. And after that, within 2 weeks, I had passed my first 100K account. And the very next week, I had blown my account. Very next week. And after that, it took a very long time to pass one challenge. When that happened, I passed that challenge. It was a 5K account, not a 100K account. First, I wanted to prove myself after that. Initially, I blew a lot of 100K accounts, and you will as well. It's very rare that you pass all of these challenges so easily. Once you start doing everything on your own, it's going to become very difficult. The market doesn't care who you are at all. It doesn't care about your confidence. It doesn't care about your greediness at all. It's going to do what it's supposed to do. And your psychology is going to mess you up completely. Now, all the people, so, Shahid, great job. You're doing 10K. That's the perfect way to do it. I would say next time go for 5K. Don't go 10K. Try to prove yourself, prove yourself completely that you can receive payouts. Once you receive payouts, get your first payout, get your second payout, you make enough money to buy that account from your profits. You don't need to put your own money at all. That's how you do it. You pass your account, you get payouts, and after that, you buy another bigger account. That's when you start scaling your account. Maybe get a 50K account, maybe get a 100K account. I don't care. And if you have a proof that you can do it, then definitely go for a 100K account, because the profits are huge on 100K account. Everyone knows that. $1,000 risk, anyone can make around $5,000. It's very easy to make $5,000 in a month. Very easy. Once that account scales to 200K account, it's very easy to make $10,000 from that account in a month. That's like I have made more in the percentage terms. If you see my last few months, you can see I have made huge profits based on percentage. 6%, 10%, 7% profits like this. So it's possible. First, you need to prove it. Now, the people who are on the broker, you guys are as well not profitable. Why are you guys spend using your $500 or $1,000 or more to blow it? Why are you using that? Who wants to make money in this month or the next month? Say yes if you want to make money in the next 2 months. No. All right. So all of you wants to make money in the next 2 months. That's a very good thing. But do you think on your own, can you do that? On your own based on of course I'm teaching you the strategy. I'm doing everything, but even I knew most of this stuff when I was doing it. Even I knew all of it. but I failed. I failed a lot more times than you guys can think of. So why do you want to use your $500 or $1,000 or $2,000, whatever it is, in the broker? You're just donating the money. You're just donating the money. Instead, you want to do something good, go maybe Fivers. I'll just see what the rates are. The Fivers, uh, two steps, 10K. Yeah, that's $78, right? Now on a 78 from $78, you can get around like if you have a $500 account on a broker, you can have six accounts of that or maybe five accounts of that, 10K, right? That means your risk is going to be $100 per trade, and your profits are going to be $200, $300 per trade, right? That means in a month you can easily make 500, $600 at this point, at a starting point, and prove yourself. Rather than losing that 500 at all, you can lose, you will have a chance of losing $1,000. $1,000 because this lets you go down to 10%. This lets you go down to 10%. That means from $78, you can lose $1,000. And if you're losing $1,000 from the prop firm on a 10K account, that means you almost have lost $1,000 on the broker account. It's similar. So why do you want to lose your real money? In fact, you can just use that money to buy more and more accounts. You'll have more time, more options. You can't keep a timeline to this. You can't say that I'm going to be profitable in the next 2 months at all. Next 2 months is a very short time. You'll first have to spend time with the charts. You'll first have to work with your psychology. It's going to mess you up a lot. A lot of times what happens is you find trades out of nowhere, during the market, always looking to get that money. So why do you want to do that? I know you have lost money, your own personal money through brokers or something like that, and that's why you want to make that money back. You want to make that 1K, 10K, 15K, 20K you have lost already. But that's not how it works. That's completely wrong. What you need to do is forget about it, move on with your life, spend time learning, and making sure that you survive. That is what you want to do. That is what you should do. Spend time learning, buy prop firm challenges, complete those challenges. Once you do that, go for the payouts. When you have that payouts, you can easily from that. I'll say that if you have $1,000 or a $500 account, you can easily scale up. Once you do this 10K, there is 10% for scaling. Okay, 10% for scaling. So every time you're taking payouts, you're making 10% profit, your account scales. It will become 12.5K, it will become 15K, and then 20K, 25K. It's not only going to increase by 2.5K. As your account size keeps increasing, it's going to scale in a larger amount. Once you are on a 100K account, it scales to 125K, not 102.5 or 105, 110. It's 125K directly, the next step. So once you have that, you can easily scale, very easily scale from these accounts. Or let's say you invested $78, you passed the account, you made some payouts. Now you still have the money left from your broker, and you can get this 25K or maybe 50K, $300. You can have two accounts of this $300. And when you pass this 50K, that means your risk now is $500 per trade. $500 is going to make you around 1,000 or $2,000, right? In a month, it can make you easily 2,500 to $3,000. This is what you should look forward to. Nothing else. This is what you should look forward to. But today, this amount feels like okay, to 3K, 5K, 6K. I want to make it today, not in after 2 months, not after 6 months. But if you haven't proven yourself, you'll probably lose this $300, all of it. Or on 100K, $545. You lose that very easily. Now, what 10% scaling means is, let's say you got a funded account. You passed two challenges. You have passed step one. You have passed step two. So fivers have an option, not an option. It's just when you make a profit of 10% in total, it doesn't matter you took a payout or not. It doesn't matter. All of that doesn't matter. All you have to do is show them, like right here, you had a profit target of 8%, 5% when you pass these challenges. Similarly, when you pass, you do a 10% profit, all in all together, you'll have a larger account. They'll give you maybe 7.5K or 10K account from 5K. And if you're on 10K, you'll get a 12.5K account. They'll give you a new account for free. They'll scale it up. Again, you make a 10% profit. They'll scale it to 15K. Again, you make profit. They'll scale it to 20K. This is how it works. I think there should be some. It's the same thing. Yeah. So when you have this 5K high stakes account and you meet the balance target of $5,500, you make a profit of 10%, you get a 80% payout profit, right? Now, once you do that, that account scales to $7,500. They give you another account of 7,500. On 10K, you get this 12,500. On 15K, after 12,500, you get 15K. After that, you get 20K. Now it's not increasing by 2.5K. Now, after 25K, you get 30K. After 30K, it's not increasing by 5K. It's increasing directly by 10,000. $40,000 now, $50,000, 60, 70, 80. And then from after 80, it's 100, 125, 150, 175, 200. Once you reach these levels, once you are on $500,000, after that, there's something else. They have a job for you directly. You get a special deal with them. They'll contact you if you do that after 500K. This for this to happen, for you to see yourself successful in the next few years and becoming a part of something like this, you need to start from this or this, not more than that. 10K at max. This is a max thing. Okay, we have to start from this. You have to pass this. You have to keep on passing this. And once you pass this, you don't you have made few payouts. You don't have to come back to this account, because now you know what it needs to be done. How to make money again. So you don't have to come back to this account. Now you can take any account you want, 50K, 100K, whatever you want. It's your life. It's your, choosing whatever you want to choose. And then from right here, you can scale to this 500K. But right now, at this point, don't waste your money in the broker. First, learn to become profitable with the rules, with the criteria. All these rules are actually made to for you to lose. That's definitely there. It's made for you to lose. Now, you need to show that you can become profitable with the strict rules. And once you do that, you are independent. You don't need anyone else. You won't be in my telegram. You will be definitely somewhere out there in the world, traveling, enjoying your life. So if you want to do that, you have to begin with something small. If you start losing $500, $1,000, you'll put another $1,000 in your broker account. You'll lose that as well. On the 100K, you lose that account, you lose that 100K, you'll buy again 100K account and you will lose that again. It's funded. If you get a scaling account, it's funded. You don't have to pass challenges at all. It keeps on increasing. That's it. You get the payouts. The profit as well changes after 200K. Oh, sorry, 175K. It's 85% profit split, 90%, and then 100%. Right here, 100% profit split plus they pay you a 4,000 fixed payout. 4,000 fixed payout after this. And after this, you don't get 550K or 600K. I hope this is clear. So I want you guys to remove that money from your brokers and use it the right way. I've been telling this to a lot of people, yet all of you think that you'll become profitable, you'll make a lot of money out of this doing this stuff, but it's very risky. It's very risky. You can't rely on psychology right now. Your psychology needs to be is a something which needs time, and you have to work on that. Once you do that, once you start getting payouts, do anything you want, create your own broker money. From this profits you can just put it in your broker and trade without rules. But first, try to pass the exams. Don't do 100K, man. Don't do 100K. You have done it already. You already have a 100K account. If you pass it, you get payouts. It's very good. But at any point, if you blow that account, you go with a smaller account. Give trading a chance. Give trading a chance. A lot of times people fail, and the reason behind it is they really never do give trading a chance. What they want is they have a timeline. Man, you spent your school and education to like 14, 15 years, 16 years, 20 years, just educating yourself and then getting a job. Now you want trading to be your career and give you that much of freedom and money in just few months or maybe in a year. That's too much to ask for. So don't do that. Make sure you risk small, risk small, and go with prop firms until you are profitable. I hope this is clear. Now, if you guys have from these sessions, if you have any questions, if you're facing any problems, just ask. And even if you have any personal problems, any issues you want to discuss with me, you can drop it here right now. So I'll tell you, if your bias is short, why I so your question is, if my bias is short, why I can't take long entry if it breaks resistance and retest. Now now when you're doing analysis on Saturday, you're analyzing weekly time frame, daily time frame, all of this stuff. Now you're saying to me that weekly time frame says that you should enter a short trade, right? A short trade. It wants you to enter a short trade. Daily time frame is telling you to enter a short trade. Now on the 4-hour time frame or something like that, where you see support or resistance, you want to say, if it's going in an opposite direction, you want to enter that and disregard the weekly and daily time frame. So what will happen is that market will disregard you, because a lot of times there is a lot of fake breakouts. Maybe the price will go in that direction, that's fine, but your analysis, your edge is somewhere else. It's not just break and retest you look out for. Break and retest is not just the only thing, it's just one of the confluence, just one of the confluence, right? For you to enter. But if you're entering the wrong direction, that means you're entering against a lot of things, and you don't want to do that. Now, FTMO is a good prop firm. I know it so far. Funded Next, I have tried once, and Funded Next, the problem was the prices were not comparable to my charts. So, for example, let's say the price is moving at 1.36356. It doesn't move. It will be at a very different distance. FTMO, something similar. So I use the Ovenda server to look at my charts. This is the charts are from Ovenda server. So Fivers is very much similar to the Ovenda servers. So that's why I use Ovenda server, so that I don't have that difference. The best top firms are FTMO and Fivers. They are there from the very beginning of the prop firm space. They have been doing payouts. They haven't failed as a company at all. So now I stopped looking for any other prop firms, because I have tried a few prop firms and I didn't find a good one. Funded Next as well. It seems good, but I didn't like it. They might be good. They might be giving payouts and everything. I have heard a lot about them, but again, it doesn't work for me. I like the sanity of 5 hours, where prices are exactly matching to my charts. The entry I'm taking there is very similar to the entry I'm looking at right here on my screen. So I don't get confused at all. The wick outs and everything, so many things are there in the market. And if that messes up, let's say a lot of times you see the price went down to 95% drawdown. And in the last two trades, in the past 2 weeks, this happened, right? And if at that point my prices are different on different charts, that means I am putting wrong stop losses, right? So that's my problem. Any more questions? Today is the day you ask it all, Shahid. I guess you're doing very well because you don't have any questions. Chesta, you too. You don't have any questions. If you have any questions, say yes. If not, say no. I'll end the session. All right. All of you, make sure you send me low, high, high, low, everything. I want to see that. Or you can, when you come to the next session, I'm gonna call out your name and ask you for the same stuff again, right here in the recording. And if you skip, that's your loss. If you skip the session, that's your loss. So, is it better to practice ourselves before getting a Growform account? Unless practicing is very easy. Practicing is the most easiest thing. The problem is you face the problems when you really enter that trade, when you start losing money. When you start losing that money, that's where you learn. That's where the challenge comes in because your psychology won't act up at all. Your psychology will be just uh, as like you have practiced it and now you're ready for the trade. And when the first trade you take, you'll be like, what the hell happened right here? So practicing on a paper trading like platform is not what I recommend. Instead, lose money. Small amount, go for a 5K account and lose that money. Because losing money is going to be painful. With small amount, it'll be a little painful, maybe not painful at all, but in fact, you'll learn a lot of psychology. When you see a lot of trades you're trying to take is hitting your stop loss, that's when you learn. On a prop firm account, you shouldn't go more than 1%. On a prop firm account, you can't go more than 1%. Now I'll tell you can you so you want to see some examples on how to use LL and LH information while taking trades. Now let's say I'm looking for AUD JPY, right? At this point, I said that I want the price to go up, retest, and then go up. I could clearly see the 4-hour time frame was bearish, right? So this retest eventually made my 4-hour time frame bullish. Now, does that mean it became bullish? Should I take the trade? The 1 hour looks good, right? The 1 hour looks good so far. Should I take the trade? The answer is no, because the 4 hour can easily turn bullish and bearish again. What you need to see is the second continuation. The second continuation is the second higher high. Then that assures you that this trade might finally be done with consolidation and now it's moving in a trend. So, of course, this is not the lower high and lower low, but just an example, which is just I'll inverse it for you. All right. Now, let's say this is your lower high. This is your lower high. This is your low. Sorry, this is your lower low. This is your lower high. All right. Now, I already saw this that the price has broken this structure and it's moving down. But right now, it's also at the 4-hour EMA retesting it, and it's I don't know what exactly it can do. So what I want from price is now to go up and then create a leg or an elbow and then come down again, break this on the 4-hour time frame. Once it breaks this on the 4-hour time frame, that shows me assurance of a continuation. There's a second higher low and higher high. Sorry, lower low and lower high. I hope this makes sense. There's a second lower high and lower low. This gives me an entry. Now, this is one case, right? Now, at some point, let's say the 4 hour is bullish, or maybe I just want to enter a trade which doesn't require that. What are the conditions for that? So, price is, let's say, already bullish on the 4 hour time frame, and we want to enter the trade, then it's a different story. You use support and resistance to get that trade. You use support and resistance of the rejections from the support line to enter a buy trade. And that is important because the price is just continuing up. You don't need second highs or something like that. You only see a retest and then an engulfing candle on a 1 hour, 2 hour time frame. That's enough for your entry. Let's say I move up to 2 hour time frame and this candle is maybe something like, okay, what happens square, something like this. This looks as big as this, and the price has been coming from down to up, and there was a resistance zone. Price continued up, created a retest, and started moving up. At this point, it gave me an engulfing like this, something like this. It looks big. I'm okay to enter because price has already shown its continuation throughout the history. If I could have had that price action, I could have shown you, but I hope you're getting the gist. If there's a history of continuation, then it's a different story. If the price has just turned, just flipped from bullish to bearish or bearish to bullish, you need second continuation to enter the trade. I hope this makes sense. Again, don't risk more than 1%. I blew my first 100K account by risking 2%. I was taking these trades, and within 2 weeks, I had passed the 100K account. Within 2 weeks, I was targeting 1:8 risk to reward, all of this stuff. So I was making a huge profits on this. And then what I did is I thought if I'm making so much profit, I can easily make around 12K, 6 or 14K from a 100K account. And I started taking risk of 2%, and it went down the drain. All this 2,000 trades were like I was losing a lot of money. And because I was losing a lot of money, I was closing my trades, the profitable trades, very early. The psychology was completely something else. I didn't expect that. As soon as I would see a drawdown, a single 4 hour candle close bearish even in a bullish trade, I would put my stop loss somewhere. I didn't find it right. I would just put my stop loss to make sure if it, let's say, comes down to $500 or $1,000, I'll exit. I didn't use the strategy of proper trailing with EMA or anything like that. I thought about the money. I only thought about the money that right now the price is at, let's say, $3,000. If it comes down to $2,000, I'll I'll just take an exit. I didn't have a proper strategy. It was all about money. So I lost a lot because of that. After that, it was very difficult to come, be seated in front of you and teaching you guys the what I have learned. It has been a very difficult journey. So make sure you only risk 1% per trade on a prop firm account. Even if you're winning a lot, don't increase the risk at all. Don't increase the risk. That is only going to make you lose money. Any more questions? Say no if you have no questions left. If you have more questions, feel free to ask. I'm here to answer all of that because after this, there's going to be advanced session. And if you don't understand this, that means you enter into a group where you won't actually get what I'm doing. After this session, if you're not understanding what I'm doing, because all of the basics I've covered today, and if you are not able to figure that out after this, then there's nothing I can do. So risk to reward is something. See, at the end, you need to have a risk to reward of 1:3 or 1:4, something like that. But the base is 1:2. your reward can't be less than 1 is to 2. So, for example, this trade USD CAD last week, it got closed on 1 is to 1, right? In fact, because of the jump in price, it didn't even get closed on 1 is to 1. But that is my saddest trade so far. I didn't enjoy this at all. I didn't enjoy this at all, not because it hit my SL, just because I closed less than I would rather close it at break even. Like the trade never existed at all. I don't like my trades closing at 1 is to 1. The reason is very simple. When you start having trades that close on 1 is to 1, that is when things mess up. Your win rate and everything mess up. You can't be closing your trades at 1 is to 1, doesn't matter how much the price is carrying you. Let it breathe, let your trades breathe. Right here, there was a reason to put my SL. It was just because of NFP, and that was a correct decision. In fact, that I put my SL. I shared that on my Telegram that I'm putting my SL before the NFP news, hours before NFP news. But on a normal day, you shouldn't be closing your trade on 1 is to 1. Let it hit your SL. Let it do what it's supposed to do. Or maybe let it hit your break even. Never close around 1 is to 1. Secure your profits. Everything strategically is a different story. Right here, there was no strategy. It was just NFP news because of that. If there would have been a strategy, then probably I would have closed around here because I could clearly see there's some support and resistance at this point. I could have closed right here. All right. Any more questions? Say no. Majority of the things are done. We are almost done with the bootcamp. So let's see. I'll update the topic on in the session on Wednesday. Let's see. I'll have to look into the charts because now it's completely advanced stuff I'm gonna bring up. All right. See you guys on Wednesday. Bye bye.